Hi, this is Roger Conrad. I'm editor of Canadian Edge newsletter. And what I want to talk to you about today is third quarter earnings. Obviously, how a company stacks up in terms of earnings, how it performs as a business is our primary criteria for keeping it or getting rid of it or buying it in our portfolios and also in our how they rate table. That's really what underlies what we do here. We're looking for good businesses that will build wealth over time and pay big dividends as that happens. Key to that, of course, is business performance, and earnings give us an ideal opportunity to really see what's going on that front. We reported on a number of the earnings in the November issue, which is up on the site. And also, I wanted to call your attention to two flash alerts you may have taken a look at that pretty much sum up the others that did not report before we went to press with that issue. These will all be explored in more detail in the December issue, which is coming out next month. But suffice to say, the gist of the numbers that we've seen, very, very strong. These are the companies, the Canadian recession was never as deep as our own, and it's considerably more tied to things like energy, growth in Asia, and so forth. So it's something of a bifurcated market where businesses that depend heavily on the U.S. are still suffering. Businesses that depend more on Asia are doing extremely well. And that's really how things kind of break down. But overall, the portfolio holdings we have, very, very strong results, up and down the line. I want to call your attention to Atlantic Power Corporation, which is an income participating security, not technically a trust, so it was never vulnerable to the 2011 taxation, but it did have a fair amount of debt, the debt portion of the IPS coming due in 2016. So that was always kind of hanging over the heads of investors, what the company would do. Redeem that debt, pay it down, convert to equity. A lot of options were available that may have reduced the distribution to shareholders. What the company decided to do instead, though, as I've reported, is to convert the entire IPS into an equity, pay the same dividend, continue to be paid monthly, and which is about 11% right now, and then continue that going forward as they expand their portfolio of power plants, power lines, and so forth. That deal is now scheduled to be going through on November 27th. There's a shareholder vote. I would strongly encourage everyone to vote for this deal. Basically, what it will do is make the entire dividend qualified for U.S. tax purposes. So, of course, if you're holding it outside an IRA, that's a very big plus. It does mean that the debt portion of that security, which some of the brokerage houses were not withholding, will now be withheld just as all equities are in Canada. But I think that is far outweighed, even for IRA investors, by the story with the long term for this company, which is they're reducing debt pretty heavily with this move. They're maintaining the same payout to us, which I think is a very big plus. And by doing this, they're making themselves more open for institutional investors, which has been one of the things holding the stock down. And they're going to be listing in New York sometime early in 2010. So I think what that all adds up to is a higher share price for Atlantic. Still got the buy target at about 10. But the underlying business is strong. I think this move makes lots of sense. And I think going forward, you're going to be very happy owning this. Up and down the line, same kind of story. Not too many new announcements in terms of post-2011 strategies. Just Energy reported some very strong numbers and affirmed that they would be converting to a corporation and didn't see any obstacles to maintaining their same dividend after they converted in 2010. So that's another big plus going forward. More or less the same thing that we'd heard from them before, but as we get closer, it begins to solidify. My thesis is again, as these moves, as these transitions to 2011 are made, as we begin to get clarification on the post-2010 dividend, we're going to see a nice windfall in all of these. That's certainly been the case with all the converting trusts so far, now up on the average of 35 to 40% since announcing conversions. And again, that's going back through some pretty tough times for the market. So it's pretty extraordinary, the effect of doing away with uncertainty on stocks, and this is again a very, very strong demonstration of that. When something is overhanging a sector, a specific stock, you know, everybody's worried about what's going to happen. The best times usually come when that uncertainty goes away, and almost regardless of what the ultimate outcome is, which in this case I think will be very, very good for our selected holdings. So that's all I have to say to you today. Again, look for intensive portfolio roundups on the trusts that we've been recommending in the portfolio section. Look for a roundup on trusts that we do not recommend in the portfolios, and therefore we don't typically do flash alerts on, but we will be recapping all of those in the upcoming December issue, and over time as we have a chance to digest them. Maple Leaf Memo will also be looking at some of the earnings for the companies outside of the Canadian Edge portfolios over the next couple of weeks. That's all I have to say today, and thanks for tuning in. Look forward to chatting with you next time.